All the content contained in this webcast is for informational purposes only. The investments and strategies contained in this webcast may not be suitable for you. Please consult your own independent financial advisor before making any investment or trading decisions. Good morning, traders and investors around the world, and welcome to TGIF Friday edition of premarketinfo.com, where we prepare you for the most important hour of the day. Well, Dennis, the SPOOs are only down 7 with the JP Morgan news out.
That is shocking. This is a nice pop we had. We got down as low as 1344 off the JP Morgan. Obviously, the JP Morgan news being, if you haven't heard already, but been all over the news, $2 billion trading loss and mark-to-market losses there. And that just came out of the blue. So obviously, risk control in some of these financials is coming into question here.
Okay, before we move on to the individual stocks, Dennis, first would like to take a look at the S&P here, or the Dow, wherever you want to look at it, Dennis. We are just hovering above this 1345, 1350 level. We had a low back in March at 1344.75, the beginning of March, and we're just sitting here, Dennis. I'm thinking this 1350, if we close under 1350 today, we could be looking at our next leg down in the market. Moving on to a specific number for our traders, 1345.75 was Wednesday's Globex low. We got to 1344 in the pre-market. Look for a test of that level. If that level breaks, we'll be trading in the low 1330s. Dennis, this JP Morgan news, I mean, it's trading down, 344. They lose $2 billion on, so far they've lost $2 billion. But what's very interesting, Dennis, is look at the chart at JP Morgan here, all right? And these losses have been going on since the end of March. What has the stock been doing since the end of March?
It's been selling off since the end of March, so that's interesting in itself as well. I think I see what the overall problem I really see with this here, Joel, is obviously the loss. The loss is $2 billion is, a drop in the bucket. It's very small, relative, like they were saying, the JP Morgan, I think, made $5 billion last quarter. So it's not that the losses are very large, but I think it just questions the risk control in the bank again. How do you let a one position loss or a derivatives loss grow to $2 billion? And then what the more concerning part to me is that they said it might go to another billion. So that means they just leave the trade on and hope it comes back? Is that what's happening? I don't know. The way I don't like letting trades go against me. So you're down $2 billion already. Shouldn't you just cut your losses and move on? It's just obviously they're in some real liquid stuff that's not that easy to get out of, probably.
Yeah, Jamie Dimon obviously is not listening to premarketinfo.com. We stress risk management. I mean, this is. I mean, he called them egregious losses. I mean, this is unbelievable. Here's this guy. He steps out ahead of the Fed, raises his dividend, and just I don't know what the phrase I want to use on the Fed, but he definitely did it. So here's the stock now, Dennis. This is what you got to look at. 37.24 in the pre-market, going lower, not making any bounces. I mean, you see a lot of support in this stock. 37.05 was the low that you had on February 16th. Sure, it looks like it wants to go there. Below that level, you're looking at the $36 level. But more importantly, Dennis, we could talk about this stock for today, but for anybody that holds this thing long term, I mean, it ain't going up anytime soon.
I can't see, you may get, these little bounces here and there, but this is a cloud over the entire sector because now, if you go back, and I'm not saying an extreme example here, but this is really how the financial crisis in 2008 started. It was all risk control. It was the banks just throwing risk out the window. Oh, houses are going to go up, housing prices are going to go up forever, so we don't have to worry, we can just hold this stuff in our portfolio, and we've seen how that ended. I just think, you've got to have risk control. This is what the Volcker rule is all about. This opens up so many, and this gives users of those Volcker rule paying its ammunition like crazy to say, there shouldn't be prop trading in banks. So that, is the other problem too, is, the legislation, the Volcker rule, now has a little bit more ammunition for them too. So the entire sector here is going to be under pressure today. I think if you do see bounces, I think you will see sellers coming into those bounces. But, it's kind of a gift. We're only down 7 points here. I thought we'd be down 20 or so on news like this. So the market really isn't that bad yet here overall. I know the financial sector is beat up pretty good here, though, Joel.
Before we move on to the other financials, Dennis, have they identified what arena or what the positions were? I mean, I'm sure they're not going to identify what the positions are because people will front run them trying to get out.
It's derivatives. It's some type of derivatives. So, that can mean anything. So.
Yeah. In a pretty, the market was in a pretty docile market too in March and April. You think that risk management wouldn't be a problem. But enough of beating up J.P. Morgan here. Let's move on to some of the other financials. We've been talking about Goldman Sachs, and boy, that's sure taking a hit along with it. There's a lot of air in this stock, Dennis. You're thinking that $100 might be on the radar.
I think it might be there, Joel. If you actually look back to the beginning of this chart, I'll go a little bit farther back to get you guys a little bit more feel. But we really ran up that one day back there. I'm looking at January 20th, Joel. It went from 96.95 up to 109. I don't know what the catalyst was that day, but there was such an extreme move up. When you see those extreme moves up, they can have extreme moves down back through the same area. We are cutting into that area now at 103.25. I think 100 could eventually start to be a magnet for this. I think you'll see some bounces. I don't think anything goes straight down. But $100, we're getting very close to that. So obviously these financials are starting to become a little bit ugly on the charts again.
Yeah, that 105 to 100 area, Dennis, you identified that. That's scary, and we've talked about that before. Kind of analogous to Bank America and the eights, the way it ran up. It took a couple days to chew through there, but the reason I don't think it will get to 100 today is we're already down 3 from the close, so they'd have to whoop this up another $3 and get it down 6. So even though I don't have a number there, I would say that that's going to be good support, and I definitely would cover some shorts if it got to that area. Moving on to Bank America, Dennis, we haven't talked about Warren's holding year yet. Really had been hanging in this 70-65, 70-70 level. Now that is crushed. What do you think, Dennis? $7?
Wow, I don't think $7 today, but $7 is maybe a target for you longer swing traders out there. We're through this key support. We had 3-4 bottoms right in the 765 area. We're trading through there now at 750. There ain't a heck of a lot below 750. I'd say maybe you get a little break here. We are consolidating nicely in the pre-market at 749, 750 area. So maybe today it can hold on here a little bit. But if they get some momentum rolling, we could see $7, Joel. Not today, but we could see it over the next few weeks.
I would, maybe a more patient trader, will look for a pop back up to the 70-70 level, because that is going to be major resistance if it can get back up there. Citigroup following its brethren down here.
Citigroup's down here too. $30 would have been key support. Would have been nice to trade it through there. Obviously, it's cut right through there, $29.45. So it is now broken under that key $30 psychological support level. I think if it goes into rally mode and gets back in that 30, you probably find some sellers up there. Below 30, it opens up here, Joel.
Yeah, someone has an inkling to buy here at 29.37 to 29.40, kind of keeping stemming the tide here in this stock. That coincides with the January 25th low at 29.32. Below that, 28.90. So right near Dennis's hold number theory.
Wells Fargo, we should talk about them all here, Joe. Wells is a little more conservative play. I know Kramer was on there last night saying a stock like this is a lot more conservative. It is going to open up close to that support area that you had identified, Joel, on the last couple of shows. 32.43 had the low in April. 32.46 you had the low for May. We're at 32.60, so we're going to open up right in that support area. I always like buying stocks when they open in the support area. Obviously, there's bad news in the sector. If that can hold, maybe you get a bounce off there to area one time. If they start to take that out, you get real nervous, though, because below that 32.43 area, there ain't a heck of a lot of support.
Yeah, it's really consolidating here at 32.60. Hit 32. Wow, got under 32.20. Dennis got to 32.06 in the pre-market. I guess you still have to respect this 32.43 area, Dennis. We've been harping on that for a couple days now. It's getting a little bit of a running start going through it today, but got to play it short through 32.43, just based on the charts.
Morgan Stanley, another one that's obviously getting beat up on the news. This thing will make a new low on the move. It appears, anyways, it is bouncing back a bit. 15.29. The low of this move is 15.35, so it is trading below there right now. That's a critical level. If it can hold that level, maybe it can bounce a bit. But man, I think that level, is probably going to get taken out. And the stock, we got to go out to the weeklies to find further support. You had some in the 15, probably 15 psychological level, give you some support, Joel.
Yeah, boy, Dennis. Look at this thing. We must have not got that memo at the end of March, Dennis, to sell these financials. Holy mackerel!
Yeah, they
I
haven't.
mean, look at this.
Yeah.
Just at the end of April, they've all just fallen off a cliff as though they were anticipating something like this. But the $15 level is pretty good support, Dennis. That was a low back at the end of the year. 15 even. It was actually on December 30th. So there's a point where, if you got $6 in your short here, you'll find some support. Looking at the pre-market confirms that activity, 1506 and 1507. So far on the bounce here, Dennis, you're right, 1530. It's just kind of hugging here. That fits in another 20 cents from yesterday's range. So if you get a pop there, don't be surprised if you stall at 1550.
And it is going to drift into the other, not direct financials, but I'm seeing stocks like American Express that are trading down here in the pre-market. I'm seeing Capital One Financial trading down here in the pre-market. And all the other littler, regional banks, I'd be careful on those two. SunTrust Bank, STI, for instance, is trading down 60, 70 cents. So anything that's got financial in it today is going to be a little bit weaker. Even AIG, which we've been saying has been very strong. It seems like all the analysts have been trying to upgrade that thing. AIG, Joel, is trading down here today, 31.58 right now after closing 32.14. Is this a buying opportunity for a stock like AIG?
Well, there's been, you still have that secondary number, 3050, that really put a halt on the break a couple days ago. We've had a nice rally through that. I don't know if there is much, directly. They've had their own problems. I don't know if they're going to have the similar kind of exposure that J.P. Morgan have. I'd look for resistance here at 32.05. That was yesterday's low. Looking at the pre-market for AIG, Dennis, you did you did get a spike down under 31. No, just to 31.02. That's where the low is in the spike. And then it had almost a dollar rally, and now really consolidating around 31.50. So this might not be one you want to beat on.
DDS, I want to talk about Dillard's last night. It hasn't traded in the pre-market, but it did report earnings last night, and Joel will go hunt down where this trade up to. I seen it trading over $70 last night, though, DDS. So they were really popping their earnings. The 52-week high right there from a few sessions ago at 67.22. It looks like, if it does indeed open up to where it was trading last night, that it is going to make a new 52-week high. Where did that thing trade to last night, DDS, Joel?
$72.
$72. People get a little bit excited. It's offered at $70.50 right now, so it doesn't look like it appears it's going to open that high. But this is a thinner retailer. It's funny, I've been in these stores before. They never seem that busy to me. I'm not really sure, but they keep coming out and beating earnings, so I don't know. Maybe they just have huge margins. I'm not sure, because these are huge. If you've ever been in a Dillard's, it's a huge store, like bigger than a Walmart, but it sells a little more. It's a department store. But man, the stores never seem that busy, so I'm always shocked when this thing comes out and always keeps beating beating earnings. So I guess it's one of those stocks that you can't just go and say, oh, well, it doesn't look very busy in here, I should go short the stock, because that definitely wouldn't work with this one.
No, Dennis. 70 to 72 has been the pre-market range. If it doesn't hold the $70 level, I don't know if I'd exactly want to be long this thing. with the market being down and this thing making a new 52-week high, you always know what my feeling is on something like this. I mean, there's obviously someone selling the 52-week high, and that's why it's the 52-week high. So might be a good day to sell the news and Dillard's. Got a long way to go to get back down to 67 to fill the gap. If you're not exiting the position, you should definitely move your sell stop up to 67 just to protect in case they change their mind and listen to Dennis's opinion on Dillard's.
Nordstrom, sticking with our retailer theme, they reported last night there as well. The stock did trade down. It got quite a bit lower, I think, than it is right now. It's 51.75. Where did that get to last night, Joel? JWN. You got that after hours?
Right when the news came out, Dennis got to 49.88.
Man, they overshoot on these things sometimes. You got to be really careful. We keep saying this. If you're trading after hours or trading pre-market, I don't advise it. We always say use the information, trade it in the regular session. But if you are trading it, you got to be careful. Don't just slam something down 4 points thinking it's going down 8. Because a lot of times these moves are exaggerated right off of the hop. People get really nervous. There isn't a lot of liquidity after hours, and especially when a company is reporting there's less liquidity. So, people are like, oh, I don't like this, I'm selling it, and they sell it down $4. It's only down 2 now, so, it would have been a pretty ugly sell if you're selling it down there.
Okay, yeah, 49.88 was the low. Running into problems here at 52, so I'll keep an eye on those levels. Keep an eye on the Globex low here, 1344, which coincides with yesterday's low. So should have a nice volatile day here. We'll see if 1350 will turn out to be resistance today and for the course of next week. So we'll be back with you all on Monday, and have a good weekend.